The rand has fallen quite sharply through the sort of second quarter of this year. Weak domestic data, negative sentiment around emerging markets. Global markets continue to reel amongst increasing fears of a trade war. I'm Bruce Whitfield. This is Taking Stock. And looking at our monthly moves on the JSE on markets around the world, the Chief Executive of Vestact, Theron, and the Chief Executive of Lehumo Capital, Maudi Lenstoane, looking at all of the big issues affecting your money this evening. It's all about Donald Trump, Theron. I don't mean to put Donald Trump and Theron in the same sentence, but it's just the way it worked out. It's all about Donald Trump. It's all about trade wars. It's about him putting $50 billion worth of trade tariffs on Chinese goods, the Chinese then responding, and people, professional diplomats, sort of sitting in between going, oh my goodness me, this is World War trade breaking out.
It's complete madness and very disappointing. I mean, over decades, they built that World Trade Organization, a whole set of rules, because generally economists agree that, trade tariffs are a terrible idea, negative for consumers, create additional confusion, economic inefficiencies. But for me, what has happened here is Trump and his team of close advisors have come up with this idea, which is all about politics. It plays well to his GOP support base. So he doesn't really care whether or not there's an economic cost to be paid. It's all just about politics. What I'm hoping is that it's all about declaring victory and then leaving the scene. In other words, they will at some point claim that they have won the trade wars and then they'll let the whole thing go. That's what I think the market is assuming. But every couple of days we have a little bit of a setback because people think, well, maybe this could actually be real.
And now you get this venerable companies like Harley-Davidson, for example, saying, okay, so we have got a big market in Europe and we've got a manufacturing facility in Europe, but we also export from the United States to Europe. Now, suddenly our Harleys are $2,500 more expensive each. We better manufacture Harleys for Europe in Europe. And then Trump comes back and threatens to close them down, and this is the end of this American company. I mean, it really is petty. Can we ignore the noise? Can we afford to ignore the noise?
Look, I think we can't ignore the noise. I mean, the fact of the matter is it's all speculation at this stage as to how far it's going to go, where it's going to end. It's not a great thing at all what's happening. It's creating so much uncertainty, and you're absolutely right. It's a question of what is really at play here. Is it Donald Trump trying to get some better deal, and then suddenly it will all go away and we'll get back to normal? And, you do sort of somehow understand to a larger degree. I mean, if you just look at the Chinese economy itself, it's a closed economy. You do somehow get the point of what Donald Trump is saying. But at the same time, the way it's unfolding where it's one country imposing tariffs on another, it's a trade war. It can never be a good thing.
I mean, and we've got motor manufacturers in South Africa. Now, we used to do an X3, a left-hand drive X3 at Roslyn for the US market. I'm told we've stopped exporting those to the US. Our exports from Roslyn now go into the European market. But Mercedes-Benz just this week has announced a 10 billion rand further investment in East London. While there's basket case stuff happening, there's actually real business coming and doing its thing, even in South Africa, despite the noise.
Exactly. All global corporates above a certain size have these distributed models now of global manufacture where different things happen in different places, and that is all potentially at risk. Companies like Apple, which manufacture in China, ship logistically, have different profit margins, they're based in various tax havens. That's all based on the understanding of the system of global trade, which is to some extent perhaps in play. But I really do think, to go back to my earlier point, that this is all about grandstanding and about politics. I don't think Trump really wants to have the negative flowback that will eventually come if people are having to pay more for goods that they want to consume in America because of strange tariffs and other things that happen. So I think he's going to take us to the brink and then pull back. That's why the market is still close to all-time highs on a global basis, and we've had these negative days and positive days. I think he's going to call chicken at some point, because the EU and the Chinese have said we're not playing your game.
We're not playing
your game.
Yeah.
Get out of here.
Yeah.
And if they stick to that. I think there's going to be a cost to be paid back in the US.
But for us, sitting here at the southern tip of Africa, not only do we have to contend with stuff that is so far beyond our control, but this sort of excitement, this effervescence around the first quarter Ramaphosa effect is beginning to wear a bit thin. Moody's has warned this week that it's concerned about populist politics getting in the way of growth, worried about things like, and they excluded NHI from it, because I guess they did the report last week before NHI was released. They excluded NHI, they would include it, but the mining charter, for example, the land issue remains bubbling without resolution, and that's the politics of South Africa, counting then against the tradability of South Africa. Big sell-off in South African bonds, the willingness of foreigners to lend us money, and that's showing in our currency market.
No, certainly. I mean, you're absolutely right. I mean, I think the whole positivity, the Ramaphobia that we came into
Ramaphobia, it's now Ramaphobia.
You know? So that's gone away, and it's now back to what is the fundamentals about the economy. And I mean, we've seen the first quarter showing, which is horrendous. And a number of challenges, uncertainties. We've still got the charter, the mining charter, and a number of other, you know, whether you put in the land issue as well. Those are some of the things that are still uncertain. And I think if I'm an investor sitting abroad, you want all those things to be finalized before you really commit a lot of capital into the country.
I mean, I've interviewed Gwede Mantashe many times, and it's a bit like playing poker. He's got a hand. He can have the world's best hand, and he'll never let you know that he's got a great hand. Or he can have the world's worst hand. You'll think he's got a great hand. I can't help but feel that this version of the mining charter is his opening bid in the game of poker that he's playing for the future of the mining industry.
Yeah, look, I think it's still going to be some stages before it's really finalized. He's put something on the table. And I think it's for the industry to really go into it and finalize it. And I think the sooner we do that, you know, the better for the industry. The industry which certainly used to contribute quite significantly into the South African economy. And I think one that can still play a bigger role is this policy uncertainty that still lingers and that needs to be resolved.
Yeah, mining used to be 20% of GDP. We're talking 20 years ago. 20% of GDP, manufacturing was 20% of GDP, and they just no longer exist. Our economy is far more diversified today, Paul, than it was back then. But we're not giving these industries, these sectors, the sort of fruition and chance that they need to succeed.
Yeah, well, politicians always believe that, you know, these businesses will last forever. So you can, you know, take your little sjambok and hit them around a little bit, make them dance. But if you look at commodities through time, they're really only useful for a period. You know, there was a time when guys with wooden boats would go all the way around the world to harpoon whales in order to, you know, have lights on the streets. And that was a brilliant and very profitable business. But then somebody worked out how to refine mineral oil. Platinum, very important industry, but, you know, you've seen what's been happening with diesel emissions. It looks as though, you know, platinum in diesel catalytic converters is perhaps not the brilliant business that people always thought it was going to be. So my perspective, not that I'm involved with the conversations in the mining charter would be at all, is that you've got to get the stuff out of the ground while somebody still wants it. Yeah. And get it done. And
while somebody's still prepared to pay $900 an ounce for platinum, get it out the ground and flog it, because it will just.
But the South African mentality is like, well, let's run a race, but let's all wear sacks. You know, we can go just as well.
No, but that is it's a big it's holding us back. We're 7% down, 8% down year to date. We're still 11% up on this time last year. Do we feel like we're in a slow burn down through a loss of confidence in terms of our investment markets on the JSE?
Look, I think you know, South Africa still has some kind of you know, a value proposition you know, going forward. If we just get all some of the things that have obviously impacted negatively on our economy out of the way, I think we still stand pretty much in a very good position to be able to do well going forward. We've managed to hold on to some of the volatility that we've seen. And in fact, the rand itself, if you look at the performance, has been pretty fairly stable. Only of late, the past couple of weeks, did we really lose the momentum. Sure. But I think if you look at it in the past couple of years, for a very good period, we did hold on. But we've seen some really negative impact, especially in the bond market as well.
We'll come back in just a moment. Market moves the month of June. It's been a busy month. I know we talk about Naspers a lot every single month, but it is our biggest company listed on the JSE. Of that 14 trillion rand or thereabouts, Naspers is worth a big chunk of that, 15, 16, 17% of that. It's a huge part of the market. They had results recently, and it's an interesting play on the JSE. We've also got a couple of other interesting moves. Steinhoff Africa Retail has had a huge walkout of senior managers from one of its core divisions that deliver 25% of its revenues. And at the time of recording this particular show, there's still been no announcement out of the company. Not a big fat public one on the stock exchange news service anyway. I'll talk to you in a moment about how we've been trolling the chief executive of the JSE on that point in a moment.